Omar, for some reason you're coming up. Could you turn your screen off as well for the moment? Thank you.
Good evening, everybody. Hello, Alistair King here. I'm Chairman IoD City of London. Great pleasure to see you all here this evening. Thank you very much indeed for joining this excellent new event, Managing Your Business Reputation Through a Crisis. We're delighted to say that this is part of the IoD London Business Extra webinar series, and it's great to see so many of you already joining. Just to say, could you please put your details as you join into the chat function? Please say where you're coming from. Please put in your LinkedIn details, and it'd be great to get some contacts going through this event. So please say where you're coming from now, and it'd be great to see how many people are coming from all around the world for this presentation. I'd just like to say a couple of things by way of housekeeping. During the course of the presentation, please put in your questions into the Q&A. You'd see the Q&A function at the bottom of your screen. Please put those questions in there, and the moderator Kirsty will then choose the ones that she can she'll read out for our panelists. Please say in those Q&As which panelists the question is for. You may ask just who is our IoD City of London branch. We are the City of London branch that covers the square mile of the City of London, plus the Shoreditch tech area, and also Canary Wharf. So remarkably dynamic parts of the City of London, and with a great membership full of young and vibrant individuals, and well worth joining, which I'll tell you more about that later on. This is an event that is masterminded by Kirsty Maxey. Kirsty is she's the chair of the IoD City of London Financial Services Special Interest Group. The Special Interest Group is formed of members of IoD City of London who have a special interest in financial services. And it's a very vibrant group. It's going to have a series of events during the course of this year. Some of them are going to be online. Some of them will hopefully later on in the year be live. But I just think if you've got an interest in financial services, then please be in touch. The details will be later in the presentation, and we'll be delighted to put you in touch with Kirsty and her team in relation to that. So I do think it'll be a wonderful event today. Just a reminder, please put in the chat where you're coming from so we know who's on the call, and also please put in your questions as they occur to you into the Q&A function. Please say who the question is for, and then Kirsty will try and read those questions out during the course of the Q&A session. Okay, that's enough from me. I'm going to pass on to my friend and colleague, Kirsty Maxey, who's the chair of the City of London Group, Special Interest Group for Financial Services. Kirsty, over to you.
Thank you, Alistair, and welcome everyone to the first financial services event of the year, and what I hope is the start of a much better year for us all. So despite us all being back in lockdown, with the vaccinations starting to be rolled out, it does feel that we can start to think about what the future could look like. Emerging from COVID-19, many businesses are seeing this as an opportunity to better manage their business, with risks and reputation at the heart of that thinking. However, as we've seen across all sectors, reputation issues can affect any business, any organisation, or any individual alike, resulting in devastating consequences. Many businesses have vowed to use this crisis to help create a more resilient, inclusive and fairer ecosystem. And financial services has actually been in the forefront of responding during this time of crisis in a way that has been, I think, more supportive, more long-term in its thinking and more human, whether it's helping SMEs access credit and funding from the government schemes, or product innovation to help businesses better manage their risks and provide customer service. But we know there's still a lot more to do. This evening, I'm delighted that we're joined by panelists who are on a mission to help businesses build back better with more resilience in a very practical sense, so that they can thrive rather than just survive. But first of all, we're delighted to welcome our sponsors for this evening, PIB Insurance Brokers, who are a leading insurance broker with access to a range of risk management and employee benefit services. They are a dynamic business created to fill a gap in the market for a specialist, independent, client-centric and service-focused insurance advisor. They provide insurance solutions for organisations of all shapes and sizes, from startups to SMEs, through to larger corporate risks. So let's start with an introduction to our expert panel. And as you'll see, it's a pretty balanced group this evening, with one ex-Lloyd's broker, an ex-journalist, and 2 lawyers to keep them both in check. So I'm really delighted to introduce David Walters, who is Head of Financial Lines at PIB Insurance Brokers. He's got over 20 years experience specialising in professional risks. He works in the mergers and acquisition space and provides advice and insurance solutions to private equity, alternative investment funds, and to those involved in corporate asset disposal. David is also an expert in corporate governance, D&O insurance, and advising companies for IPO. Welcome, David. Secondly, we have Patrick Brodie, Head of RPC's Employment Engagement and Equality Practice. He's built a reputation for helping organisations design and implement inclusion and diversity strategies. He specialises in financial services regulation, whistleblowing, and corporate governance. And Patrick edits the whistleblowing chapter for Tolley's and is the winner of the Lawyers Employment Team of the Year award. Welcome, Patrick. Next, we have Omar Salem. He is the Managing Associate at Linklaters, specialising in financial regulation and public advocacy. He provides advice on complex regulatory matters, transactions, and investigations, as well as on legal aspects of reputation management. His clients include everyone working in financial services, from banks and brokers through to asset managers, private equity houses, and mortgage lenders. Prior to his legal career, Omar worked for a major think tank in the UK Parliament. Welcome, Omar. And finally, one of my own colleagues, Rupert Bhatia, who is Associate Director at the Financial Services Specialist Communications Agency, Team Spirit. In that role, he advises firms in the financial services sector on both day-to-day reputation management and crisis response. He's a former BBC broadcast journalist and leads Team Spirit's media training and executive coaching arm, which prepares leaders for internal and external engagement. Welcome to you all. So if we go to the questions, and just a reminder for anybody who wants to ask any questions, please use the Q&A. So it's the Q&A chat line for questions, and it's the chat line for any introductions for your LinkedIn, etc. So if I can come to you first, David, and I think one of the things that we want to start to understand is what you think are the key risks that businesses need to consider on that road to recovery.
Thank you, Kirsty. Good evening, and thank you for the generous introduction. I think if I'm thinking about what the key risks are likely to be for businesses moving forward for the next 12 months, probably the best starting point for me would probably be what sort of claims we have seen in our management liability portfolio in the last 12 months. And you'll soon start to see where the pressure points are for various institutions. In order of frequency, not really, I suspect, providing too many surprises here, you're going to see employment practices claims, and I'm sure Patrick will expand on this later on. The claims we see mostly allege wrongful dismissal or a failure of process around terminating people. Regulatory claims we are starting to see a lot of, largely emanating from mismanagement, potential insolvencies, and then businesses, as we know, are under inevitable financial pressures. and we are seeing again wrongful trading claims starting to come through. So all of those claims are parked in the last 12 months. But interestingly, very interestingly, reading the Times this morning, it is cited that the company insolvencies right now are currently at an all-time low. I think that's largely due to the various packages that are available as a result of the pandemic, and businesses are keeping going, which obviously are very, very, very welcome, despite the fact they're as a result of COVID. Those packages will inevitably fall away as we go through the curve, as the vaccinations take point, and as the economy starts to return to a degree of normality. And so the prediction, and I don't want to sort of sound like a Cassandra here, would be in the next 12 months, there could well be an uptick in bankruptcies as the economy readjusts and gets back to normality.
Thank you, David. Patrick, can I come to you?
Thanks, Kirsty. Thank you also for the introduction, and thank you, David, for setting the scene. It may well be not necessarily at this point, but later on that I pick up some of the issues around employment-related claims, particularly when they flow out of the current pandemic and the COVID situation. But I think my starting point is almost stepping back, because without doubt there will be various political and economic and societal headwinds which we'll all have to sail through. You got global versus national interests. We're going to face the influence of and we're looking at the big economic powers, whether China, the US, and then interesting today in the newspapers that the talk of an alignment with Japan. There's India, there's also our relationship with the European Union. And we'll have to better understand how the UK's relationship with each of these evolves, because they'll influence our own trade and economy. And you can't avoid the fact that there's Brexit, which will impact on cross-border regulation, the provision of services, and the mobility of people. Alongside that, you've got environmental concerns as well, which will lead to further initiatives, and those will simply gain prominence. Alongside that, there's the advance of technology, the use and protection of data. Central to our economy at the moment is the effect of COVID-19. Not just our economy, but our employees as well. The latest official figures show that unemployment was 5%. That's a 4-year high. And we know that the tightening and the easing of lockdown will affect unemployment rates further. There's a particular emphasis on how we exit the job retention scheme. Now that's kept unemployment rates at bay, but that may well change. Then, and David's touched on it, we have the rollout and the effectiveness of our vaccine program. Again, that's going to influence the recovery of our economy. But it's not all gloom. Certainly those are threats, worries, and risks. But what I take away from it so often in my conversations with people is, if we can navigate that safely and confidently, it provides opportunities. And again, in the conversations I'm having at the moment, it's organizations they're looking at what can be controlled: people, response to regulation, location, innovation, employee engagement. And when I have that in my mind, and I then turn to the workforce, I think what I realize is that we will succeed, but we'll succeed if we can provide safeguards and certainties, particularly to our employees in what is undeniably a uncertain and worrying world.
Thank you, Patrick. Some hope there in terms of managing some of those risks. And I think we can all see in terms of building back a better relationship with employees is at the heart of that. I know you're going to touch on that a little bit later. Omar, can I come to you? Can you share your thoughts in terms of what you're thinking here?
Thank you. Obviously, regulatory issues can have a huge impact on reputation. I'm just going to talk a bit about how the FCA and the PRA are approaching things at the moment and what that means. I think the first point to really start with is, in a way, it's same old, same old. The FCA is still saying that firms need to meet their regulatory requirements through the crisis and coming out of the crisis. There's very limited forbearance. They're still interested in the same things that they were interested before, like anti-money laundering, market abuse, culture, those kind of themes. So but of course the actual environment is somewhat different, and firms need to adapt to complying with regulation with different approach to technology and people in different places, how they monitor staff, for example, to make sure, which is harder than it might have been in the pre-COVID period. So the firms really need to focus on that.
Yeah, thank you, Omar. And just building on that, Rupert, can you talk about that from a kind of reputation perspective?
Yeah, certainly can. Thank you, Kirsty. And you mentioned reputation, and for me, that is a huge risk. We all know how critically important a good reputation is and how hard it is to win, but it's also so important to understand how easy it is to lose. Full disclosure, and please don't shoot me, I was a journalist for the best part of a decade, and I know firsthand how reputation impacts the way a business might be covered in the press. Most obvious example I can give you really is Sainsbury's and their proposed merger with Asda a few years ago. Initially fairly neutral. In fact, I ran a neutral story on it. However, you may remember that the then CEO, Mike Coop, did the rounds on TV and radio later that morning. And before going on air with ITV News, he sang, "We're in the money. The sky is funny. Let's send it." You get the gist. It went on. And front page news the next day. Insensitive Mike Coop lords it over staff as he looks forward to giant payday. Those sort of headlines. And you probably know the deal didn't come off in the end. Mike Coop is no longer CEO. The press went from being neutral on Sainsbury's to being negative, all because Mike Coop sang 4 lines of a nursery rhyme when he wasn't even on air. Back to today, and recovery and businesses are facing all manner of hurdles, to be honest with you. HR elements like the end of the furlough scheme, supply chain issues, simple demand, not to mention what David, Patrick and Omar have all gone into detail on. But like Sainsbury's know too well, a communications failure can see hard-won reputation undone in a matter of moments. And that's a real risk for all businesses right now. So effectively 2 parts to a comms failure. One, the subject. So we could be talking about price increases, redundancies, or even repossessions. And then the way it's communicated, the language used. Was it treated with the right degree of sensitivity? In most cases, part 1, the subject, is unavoidable, particularly in the current climate. But part 2, how that's communicated is entirely controllable. The way a business is perceived to treat its customers and staff has always been important, but now more than ever, and in many ways, it's not quite what you say, it's how you say it.
Yeah, thank you, Rupert. So plenty of things for businesses to consider there, huge issues. And whilst recovering revenue is probably right at the very top of most businesses' list to focus on, what else do you think businesses need to consider in terms of rethinking the organisation and the operation? Patrick, can I come to you first on that one?
Thanks, Kirsty. I'm going to focus on employees. It feels appropriate as a person who spends every day and most days within a year thinking about people, workforces. And the first element which strikes me is that organizations will have greater flexibility now in where and how, and it's a how bit which is important, how employees work. The new world of work it's going to create new freedoms for companies to engage with and motivate employees. And over the last year, many of the traditional ways of working, including team dynamics, engagement, have been challenged. They've changed. What was thought impossible or too difficult is now, well, look, it's just now every day. So by simple example, all of us working from home productively. With that, some of the shackles of and this is a challenging part, but some of the shackles of employer control have also been removed. So the level of daily scrutiny has been, in my mind, diluted during remote working. Employees have been given greater freedoms as to how they work. And this is in itself, it's increasing emphasis on output rather than the measurement of the input. And so what's happened is employees in many ways have been given further independence. And for many employees, this is liberating, it's rewarding. But for some organizations, that loss of perceived control can be difficult. And at an employment level, especially in a regulated environment, conduct's often moderated by explicit rules. We have explicit rules to determine what people do and how they do it. But also, and this is a really key element, is that there are unwritten principles of ethical behavior. Now, we know that employees are oftentimes told what they can and can't do, and they're told that by the corporate rule book. And that gives a level of control to companies, it gives them certainties. But the risk, if that control is excessive, is it reduces employee satisfaction and engagement, which feeds back to the theme of independence. So in my mind, I think if companies can really effectively balance employee independence, so that drives employee engagement, against supervision, so controlling risk, without being too prescriptive, that in my mind, that's a competitive edge.
Yeah, I think that's really interesting, Patrick, and definitely food for thought. If I can come on to you, Omar, what's your view on this?
So just to pick up quickly on something that David mentioned, which is the fact that there've been a lot of there's been a lot of forbearance currently and government schemes to support people. So, for example, the FCA has required firms to give payment holidays, mortgage holidays to customers, and those could run up to. They say that currently the plan is for them to run until July this year. After that happens, and maybe hopefully we're kind of out, at least a little bit further out of the crisis, there's still going to be a lot of people who are in financial difficulty, both on the business side and individuals, and so the treatment of those people is something that's going to be very important for regulators. And another point is on the wrongful trading side. Even if you where it's a financial services firm and you're a senior manager, you have regulatory obligations in addition to the company law ones around wrongful trading, and so people need to be mindful of that when a financial services firm goes into administration, then the FCA or PRA will be engaging quite heavily with that firm and will be looking at what went wrong and why. And so it's important to remember the regulatory side of that. I think on the kind of I guess more positive side, I think coming out over the next year, and there are great opportunities around ESG, and I think that is something that is going to it has got a bit of a wind behind it now, and there's a lot of scope to rebuild in that area, looking at both on the side of the regulatory side, which is going to drive greater disclosure on ESG metrics, but also the government's kind of head of COP26 is ramping up its activities. It's I mean, for example, funding a national infrastructure bank that's going to be aiming to support net zero. So I think, but the risk of ESG is that there'll be more scrutiny because firms will have to disclose more information, and so that's the flip side on the reputational side, where you're disclosing more information that may not be reputationally great for you. So I think it's an important thing to focus on, both from a regulatory perspective, but also from a reputational and customer perspective.
Yeah, I think that's a really good point. And Rupert, you can probably build on that from a reputation perspective.
Yeah, I certainly can, and very interested that Omar mentioned ESG. From a reputation perspective, it is almost a form of ESG, really, environmental, social, corporate governance, demonstrating that a business is effectively making positive change can really help to mitigate any difficult decisions that have had to be made. One example is G4S, who've been out hiring out-of-work pilots to work on different projects. Lots of pilots obviously have been made redundant. In fact, there was an article on the BBC about this earlier today. I urge you to go and have a look, it's quite interesting. We are looking, though, of course, at financial services, arguably not the most diverse of sectors. Ideally, we'd be looking at some big ticket items, pay disparity, real representation of women and BAME individuals on boards, but these can take time and not always easy. So instead, you think about a number of extremely successful companies that I'm aware of anyway, that are using this time to come up with ways of really showing a difference. We can't all hire pilots. So instead, could we be thinking about apprenticeships, either introducing them or tweaking them to focus on really underserved areas, committing to paying interns, helping staff with their mental health by ending the day 30 minutes earlier, insisting that all staff get an hour away from their screen in the working day, online yoga, puppy leave. It really can be that simple. From a reputation standpoint. Anything a business can do to show that it's been in really trying to help people while trying to right the ship is helpful. And these are the sorts of things that can be shouted about from the rooftops. Positive news is hard to come by these days. It's worth remembering that. And of course, this is the elephant in the room, remote working. The majority of us are doing it. But what about when the vaccines are more widely rolled out and lockdowns lifted? Will a business require staff to come into the office, avoiding the pitfalls of X company is threatening to fire me unless I come into the office where I don't feel safe, is going to be something that businesses are going to have to consider, and really quite quickly.
Yeah, thanks, Rupert. And I'll stay with you on the next question, actually, because I think it follows on nicely from that. With everything else that's going on, how important is the role of corporate governance in SME businesses? So thinking about it from an SME perspective, and specifically from your perspective, you know, what do you think are the steps that SMEs need to take to protect their reputation?
Yeah, really good question. And essentially, it's hugely important. And it is partly back to that ESG element. Corporate governance is incredibly important. Decisions that SMEs are taking need to be perceived as being legitimate, and most importantly, fair to all stakeholders. And I do use that term perceived a lot. And let me explain very briefly. Use the example of Airbnb, a company most of us have heard of. They laid off a huge proportion of their staff last year once COVID took hold. Why wasn't more heard about it? Well, actually a fair amount was written, but almost all of it focused on how Airbnb was conducting itself during what's clearly a very difficult time. So firstly, it went above and beyond its statutory requirements, paying all staff a sum regardless of how long they've been with the business, equal to at least 13 weeks salary. Secondly, all staff were gifted their work laptop. And thirdly, and to my mind, most importantly, and we have seen this with Monzo in the UK previously, Airbnb said they would create a portal to help this tranche of now former staff find future employment. Did it help? I don't know. In the midst of a downturn, in all honesty, probably not. But the perception it leaves you with is that Airbnb really cared and didn't want to have to make this decision, and they were doing all they could to help the staff affected. It's genuinely quite powerful stuff. Obviously, Airbnb, not an SME, but the principle does remain the same. There needs to be a coherent communication strategy in place.
Thank you, Rupert. Some good tips there. Omar, over to you, thinking about it more probably from a kind of corporate governance perspective.
Yes, so I'd say three things. First of all, the importance of culture. I think culture is just so important to governance. The most important thing for governance is I think undoubtedly culture, not structures or boards or constitutions, or it's just how you do things that is vital. And like a lot of things that are good for a business generally are usually good from a regulatory perspective as well. So I would always focus on culture first and making sure that you've got the right culture. I think the other aspect in terms of especially SMEs is thinking about, you know, how you adapt as you grow and change and so on. So always reviewing your governance model and making sure that it's still appropriate for, you know, as you kind of hopefully grow, and still works. And then I think the third aspect is evidencing what you do. I think, you know, where you know, it can be difficult sometimes to, you know, compared to the bigger firms, there's not as much process around around things, which is appropriate, but it's worth just thinking about if a regulator came in, you know, how you would evidence how major decisions were made, how issues of compliance issues or issues of customer treatment were dealt with, and put in something, not necessarily something heavy-handed, but just make sure you kind of do have an eye to evidencing what you've done, because you know, the FCA or PRA may come in years and years later, and it's good to have that evidence there.
That's great. Thank you very much, Omar. And David, just do you want to sum up on this one?
Yeah, thanks. Thanks very much. Without trying to sound too much like Mandy Rice Davis, I really do believe that the corporate governance is absolutely fundamental to any business. And of course, we also know that there is an increasing amount of scrutiny on SMEs, particularly larger SMEs. And that's work that is going on all the time. And so, you know, the blur between large SME and public is really becoming quite significant. But the absolute key, I think, to corporate governance is that it is embedded. And it sort of picks up on Omar's point of culture. Absolutely, it does. If you, you know, it is vital that not only the senior cadres of management in a business take it seriously, it's the middle tiers of management that need to be absolutely schooled in this to ensure that there aren't any systemic problems in the middle of the company that will come back to bite the senior tier. You know, we have seen so many high-profile collapses. And admittedly, these are all public companies. Carillion, Patisserie Valerie, Thomas Cook, all of their reporting accounts will have statements in there telling you how they adhere to the various corporate governance codes that are required by the stock exchanges. Yet, we do know that within the guts of the business, there were things that were going very, very fundamentally wrong. So it is absolutely essential that company directors can demonstrate that as a management team, they're not just talking the talk, they are embedding this. And again, it goes back to Omar's point. I do think it's worth mentioning the current groundswell of opinion that is calling for more scrutiny of the audit function. You know, how that needs to be made more independent, and that is, you know, that is a function that's supposed to pick up these things sooner rather than later, and so that is going to be an interesting debate that rumbles on for the next year, I'd imagine. So it is so important for any company, but it's actually interesting if you notice some, you know, looking to the next 12 months, King's College London have the business team at King's College have turned around and said, look, actually, SMEs, in order to survive, and I quote, need to or ought to innovate in ways we would not have done otherwise, and even to take risks, which is really interesting, because what it means is that there is no hard and fast answer. On the right side of the coin, there is embedded pretty strict corporate governance. But actually, to weather the storm, these guys are going to have to be nimble, they're going to have to innovate, and they have to do that within some pretty tight tramlines.
Thanks, David. Yes, I think balancing that kind of risk and reward and considering, you know, what risk you want to take and within a framework, what kind of governance framework you need to have in place, all big questions that people are considering right now. Just before we go on to the next question, if anybody's got any questions, please do stick them in the Q&A and we'll come to them very shortly. So if we go on to the next question, this is definitely one for Patrick, and I think it's one that we all understand and can see every single day. You know, as we try to build a stronger business going forward, at the heart of that is building better relationships with our employees, some of whom may have been through furlough and redundancy. So what do you think, Patrick, are the key considerations for businesses thinking about a new relationship with their employees? What should they be thinking about?
Okay. I realise, Kirsty, when I answer this question, I have to be limited by time. It's such a brilliant question. It's such a sort of expansive area you can cover. So do you mind if I limit it just to, I'm probably just going to look at 3 areas, some of which we've touched on. Remote working. I'm going to look at the impact as well, and it partly picks up some of the observations of Rupert in terms of the impact of COVID-19 on underrepresented groups and just how important it is to rebalance those challenges to those groups going forward. And thirdly, it's a point which sits slightly outside the COVID environment and the pandemic, but I'm just going to look at Brexit and some of the more recent conversations, certainly ones which are starting to take place last week. I know the government's changed its position today, but last week that was the possibility of a debate about diluting employee rights. And the premise is, if in reality, if that were to happen, whether an organisation could create a competitive advantage by providing greater safeguards, even in the face of that dilution. I said I'll touch on remote working first. Look, we know that lockdowns showed us that location ceases to be a limiting factor. When we're working in a much more hybrid world between office and home, and companies, I know because others have talked about this, will be looking to ensure collaborative working between individuals, and that's about creating a crucible for ideas and innovation. It's just so important. It's about what we do, and physical presence with groups again often drives that. And another essential ingredient of that balance between remote working and proximity of individuals is ensuring proper training for our employees. And oftentimes that means being together. But what we do know, and this is the opportunity, is if remote working can be designed effectively, and it will be, it just opens this amazing area for new recruitment markets for all of us. So sitting in the city, our hiring isn't going to be limited by an ability to commute. That won't be where we are. So if you have an office in London, in reality, the people you're looking at could be in Leeds, they could be in Manchester, they could be in Birmingham, they could be, well, actually, they could be beyond the boundaries of this country. If you get your tax right, you're looking at pools of people in so many different places. That's a great opportunity. The second point, and I think this is a really, really important point, because it speaks directly to an organization's culture, its purpose, an expression of itself, both to its employees, but also to potential employees. And it's well understood that COVID has had a major impact on underrepresented groups. So in the lead up to the pandemic, there was just so much brilliant work and projects and initiatives which we're all being engaged in, which were about the promotion and progression of those groups. And they'd taken an amazing step forward. But COVID, we know, has had a disproportionate impact on women and BAME communities. That has to be addressed. Organizations with purpose will have to look to address that. And successful companies absolutely will. The third point was Brexit. It partly speaks to the above, but the departure from the European Union, as I said, triggered a debate, and that debate was being pushed within government last week, about whether we being the UK, would create a more flexible working environment with the dilution of employment rights. Part of that discussion, if you remember, was about removing a 48-hour working week. But what we do know as employers looking after people is that those dilutions, they absolutely increase employee uncertainty. They create this sense of uncertainty. So organizations themselves at that point, if that decision had been taken, it may be taken in the future, you can ask yourself again, is there an advantage in maintaining greater levels of protection for employees over and above a government position? Because you drive engagement, you drive protections. And the final bit, which is sort of a fourth point, and picking up on Rupert's really elegant conversations about communications equally as it related to our B&B. If there is one thing which cannot be limited, it's communication with employees. I still haven't had an experience where organizations have over communicated. And equally, what life has told me is that where there's silence, that silence is oftentimes interpreted negatively. So communicate.
Absolutely. I think everybody can see that in their own organizations day in, day out. You know, you cannot over communicate at the moment. Thank you, Patrick. Over to you, David. What's your point of view on this?
Well, Patrick has really sort of aced me, so I'll keep this mercifully brief. I mean, in financial services in particular, and particularly in the insurance broking world, we have always said that people are our biggest assets. Absolutely they are. And as you know, we have relied on them heretofore for face-to-face negotiations in Lloyd's of London, which it just is not happening now as it used to. But as Patrick, Rupert and Omar have said, everyone is adapting. And we are able to trade significantly effectively in the new environment. Employee dynamic is absolutely crucial for any board. And in my view, I think boards really need to understand their HR responsibilities. You know, every time there is a change in structure, so if a furlough scheme is introduced, people need to understand it. You don't want to do something inappropriate and get yourself into trouble. So it's attention to detail, which I'm guessing is you know, engaging very heavily with HR and doing the right thing as often as you can. And this is not a time, absolutely, this is not a time for maverick actions. I think, you know, companies really need to sit down and think about what they value in their employees and work on developing that to the maximum.
Thank you very much, David. Rupert, anything to add to that?
Yeah, a couple of bits, and I'll echo Patrick as well. Actually, from a reputation perspective, we often think of reputation being purely about how a business or an individual is perceived by people external to that business. That isn't the case. Reputation isn't just something for an external audience. It's incredibly important internally too. And so for my money, I do a lot of work with business leaders on their own internal communication. And a lot of that focuses on being authentic. The more authentic the leadership can be, the better. Seeing friends and colleagues having to leave a business can clearly create difficulties for those left behind. And people don't necessarily want to see those scars swept under the carpet. And again, this is where communicating effectively can be so beneficial. And we think about the post-pandemic environment. Do we need more of a two-way relationship between staff and the business? Is it worth having, for example, a town hall meeting? Potential questions could be managed in advance to avoid any embarrassment. Could a senior leader record a video addressing people's concerns? Whatever it is, there needs to be empathy, and the relationship with remaining employees has got to be taken incredibly seriously. Is it worth finding a way to reward those who remain? Not necessarily in a financial way. And I mentioned earlier, and we all mentioned a little bit about remote working. if, as expected, significant numbers of businesses embrace the cost saving, and let's face it, there is a cost saving that remote working might have, do we need to consider empowering employees with more trust? You may have read about various tech companies offering solutions for businesses to ensure that staff remain productive, logging keystrokes or similar. Is that the sort of firm that you want to be known as? It's a balancing act, but again, perception, absolutely critical.
Yeah, that's so true. We see that time and time again in our business, don't we, Rupert? So let's go very quickly to the final question. Just a quick answer on this one. Finally, do you believe that financial services sector is ready to be more inclusive and more resilient? And what's the one piece of evidence that you see that gives you the confidence that the sector is trying to build back better? Omar, can I come to you on that one?
Yeah, so I think I'd say that parts of it are ready. And I think one of the areas where it's more ready maybe than other parts is the E in ESG. So I think I'm kind of optimistic that we'll see good progress on that in the next couple of years. It might not go as far as it needs to go, but I think it will be a step forward.
Perfect, thank you. And we certainly see that as well. That is probably the number one question that we have on most of our briefs at the moment. Patrick, any views on this? What are you feeling confident about?
Well, I'm feeling confident about it. I'm not suggesting that we're very far from where we need to end up, but I'm confident. My confidence, I think, comes from, it was an observation actually by Ben Bernanke, who was the chairman of the US Federal Reserve in 2008, and he makes an observation about economists and financial regulation. And what he said was economists just assume that human behavior was rational. Human behavior was rational. That's what it was all. Free market economics was about, rational behavior. We're not rational. And the regulator has focused on culture and behavior as a result. Absolutely focused on culture and behavior. And within all of that, and you see it within the PRA, is also a driver for diversity of skills and experience. And I am hoping that actually that drive, if we tie in some of the comments about the underrepresentation of certain groups and ensuring that they are brought into our communities within organizations, for just that diversity of thinking, ideas, experience, skills from as broad an audience as possible. That genuinely gives me confidence.
That's great. And finally, David, do you want to just sum up from your perspective?
Yeah, thanks, Kirsty. Flipping the question around, I mean, regarding the second point, financial services has been, I think, pretty robust during the pandemic. The businesses have innovated and they've held up. The obvious next challenge as we go into 2021 will be the rather noticeable absence of financial services from our withdrawal bill, and that needs to be managed. Although we do know, and there's much evidence that businesses have actually innovated in order to maintain their passporting rights to a lesser or greater degree, and that is to be applauded in the short term. In relation to inclusivity, I'm very pleased to note that the industry I joined in 1984 has transformed to a huge degree. I am quite sure that we have still got a long way to go, to echo Patrick's point. But as an industry, financial services is inexorably moving in the right direction, and it's maintaining that momentum that I think is hugely important as we go through the next period of slightly broken play.
Thank you very much, everyone. We're going to go to the questions now, just to get through a few of those. If we start with Peter, his question is, he's keen to understand or hear the panel's thoughts on the gap between market sentiment and consumer reaction, and he's referring to things like when Boohoo were hit hard by supply chain issues, and the share price suffered, but sales revenues surged. So you get that kind of difference in terms of audience behavior, what they care about, what they don't care about. What's our views on the gap between the two? Anyone want to pick that one up?
I'll pick that up very briefly from a reputation standpoint, Kirsty. Interesting question. I think what it's worth thinking about is actually there's often a delay between when an audience actually realizes that something has happened, and that then will affect their buying behavior as to when it happens. So obviously there was a lot of reporting around Boohoo. You've got to also look at the type of audience, the type of person that's buying from Boohoo. Are they going to be reading the broadsheets, for example? You know, it's an arguable question. But later on, when people start to then type in Boohoo to Google and they look at actually a little bit more detail, they might be looking for a Boohoo dress, and suddenly they'll see a news article about how their behaviors have been criticized. That is when we'll see the big difference. So it's just a question of time, I think, and so it's not always going to be reflected. The share price might be low one day and audiences might be doing very well the next, and sales won't be doing very well the next, but actually give it a few days, it should all calm down by definition.
Yeah. Yep. Rupert, anybody else want to add to that?
I was going to echo in many ways what Rupert was saying, that there is the time lag, or the time connection between the event and the consequence of that event is often quite erratic. It's quite difficult to judge. And partly that's about the quality and the nature of the social media which picks it up. Yeah. And there's a generational element as well, and how we respond to that. There are very different consumer buying habits when you split it on a age demographic. So that does have a significant impact. It's also worth bearing in mind that investor attitude to a corporate changes corporate behavior, and it will be indicative in the share price. You can see that in a number of organizations, and Boohoo may well be one of them, where they have run a governance review, in effect a employee review, a workforce review, as a result of what was being carried in the press.
Yeah, I think you can see the differences in terms of buying behavior and the impact on that. But you can also see it in terms of trust as well. We see that trust changes in a business, and that is often demonstrated by a company when it takes more of a concern over these kind of issues. Trust actually increases. Sabilla's got a great question. What are some of the key risks that financial services organisations need to consider with the move towards platformication, with the API and increased use of AI? Anybody want to pick that one up? Tough one.
I'll have a go. So there are a few. I'll just throw out a few different things, and maybe others can pick it up if they want to. But so a key theme is operational resilience. So if your platform goes down, if you're then you're in trouble, and so you need to have backup systems. You need to have thought through how you'll manage that. I guess on the AI side of it, the issue is governance of the AI. So traditionally, there's been an increasing move towards, well, what's called product governance. So but now it's the governance of the AI that's going to be the focus, and regulators will be looking at that increasingly.
Yeah, I think that's a really good point for people to take on board there. David's got a question here around post-Brexit. British businesses have been encouraged to go out into the world buccaneering. How should business leaders balance their company's animal spirits with the potential risk to their reputations? Patrick, you put your hand up there for that one.
Actually, I was going to put my hand up to answer partly the AI points.
Oh, right. Okay, sorry.
The only element I was going to mention AI, depending on the nature of the AI, is algorithms aren't infallible. They sometimes have biases, as we've seen. So it's worth bearing in mind as well. And I only look at this in terms of, you might use it in a recruitment environment or whatever, wherever it might. If you're making judgment calls on AI about individuals, test what could be the inherent bias within that algorithm.
Yeah, absolutely. Who's actually doing the coding? That's the question. So who wants to pick up David's question around what business leaders should do to balance out companies' risks and reputations?
I think Kirsty, I mean, we, in our own way, we've all touched on this during the earlier Q&A. It's all very well and good telling everybody to go out buccaneering. And yes, everyone has to innovate and people have to be creative and you know, quite aggressive in a marketplace. Absolutely understand that. But in terms of reputational risk, you have to do it within tramlines. You cannot just blunder around and hoping it will all be all right. That is not a viable, just not a viable scenario. Now, regulatory authorities, as Omar has said very eloquently, are not stopping what they do. Their scrutiny is still very, very strong. And if we know that in 12 months' time, there is, you know, the economy self-rights largely, or partially, and there will be a correction in terms of company performance, company regulation and investigation, to have just gone out buccaneering with no thought for the tram lines within which you really do need to operate is probably, in my view, not a great plan.
Yeah, absolutely. Does anybody want to add to that before we go on to the next question? We've only got a few minutes left. Yeah, Omar, over to you.
Can I just add that I think that one thing that is important to remember is that actually innovation is not just about buccaneering. It's actually a very rigorous, organized process, and so a culture and approach that supports that is likely to support buccaneering, not support innovation. So you know, I think that it's quite possible to be innovative without taking undue risks. And the other thing I think is that I don't think, you know, regulation doesn't necessarily prevent firms from taking risks, but what's important is that those risks are considered and reasonable. And so I don't think it's necessarily the case that like there is really this kind of opposition between innovation and regulatory compliance. I think they can actually be supportive of each other.
Yeah. So thank you. And this question from Stephen, he's basically asking, you know, if as a chairman of a company, you see a client company doing something that's not right, that is indicted for fraud, and you are in association with that company, although you don't manage it, but your company could be negatively affected. What do you think the chairman needs to do in that situation? Rupert?
I mean, yeah, I'll take this purely from a reputational standpoint. You've got to, for my money, and typically you've got to front up if that's the case, and you've got to very clearly, very straightforwardly say that this has nothing to do with my company, and we have very, and make sure you do have very strong regulation, very strong governance, and you know, we are very confident that we have not broken the rules, and if so and so it has been indicted for fraud or has been found guilty of fraud, you know, we will be taking steps to ensure that we tighten up all of our processes to make sure we don't ever go through this again. We don't ever deal with this sort of individual, this sort of company again. Very straightforward. And actually, if you front up, more often than not, from a reputational standpoint, your customers will forgive you.
Yeah.
I think from a regulatory point of view, I'd say it's difficult to advise on a specific scenario, but if you're in doubt, then obviously depending on the size of your firm and so on, then you should speak to compliance, you know, if you're not sure, and get the advice from them, because that, you know, and that it, you know, rather than and I think that's a wise thing to do generally, and it's something that regulators would expect. If you look at some of the fines of individuals, it's been where they haven't involved compliance or they haven't listened to what compliance has told them. So I think that if in doubt, it's worth talking to compliance.
Yeah, listen to the experts in the business. We've only got 1 more minute left, so I think we might have to close the questions there. Unfortunately, is that right, Alistair?
That's absolutely right, Kirsty. Thank you very much indeed. I think that's been a remarkable set of conversations. So thank you very much indeed for chairing such a informative and excellent event, Kirsty. Thanks very much indeed. I'd also like to thank the panel members for their kind input and also their excellent answers to the questions. I very much enjoyed their input, and I just think that the audience did as well. Certainly, the feedback that I'm seeing has been universally positive. So thank you very much indeed for your kind time and attention to that. I'm going to mention the networking session, which I'm sure everyone's waiting to get on to shortly. You've seen in the chat there are a series of there's a Zoom links in order to get onto the networking session. So please consider going on to that, and that we're going to start that very shortly. I'd like to talk to you a little bit about the some forthcoming events. On the 8th of February, I'm going to be interviewing Lord Grimstone, Jerry Grimstone, the Minister for Investment at the Department of Business, Energy and Industrial Strategy. He's an extraordinary man, and I think absolutely worthwhile. I'm very much looking forward to interviewing him. But before that, we have on the 2nd of February the role of acceptance and resilience in reinventing your travel and hospitality business. That's part of the Central London's special interest group in relation to hospitality, which I think is very prescient given that what's going on at this time. So those are two events that I'd like to highlight. We have a whole series of events coming up, which I think will be interesting. We also have a very vibrant Chinese New Year event, which this year takes place on the 16th of February. And I'll be interviewing Annalise Dodds, the Shadow Chancellor, on the 22nd of February. So there's just a couple of forthcoming events that are worthwhile. And then just want to talk to you about the IoD and its membership. There are some extraordinary benefits for becoming a member. I've listed some of those there on this slide. And I just think I'd like to highlight the professional development courses that are done. They really are very good and absolutely well worth signing up to. More details on IoD.com. Plus also all the courses, training and the qualifications that you can get through the IoD. And also a membership of special interest groups like the one that Kirsty so excellently runs for financial services. There's a special offer this month to get a 20% discount on your membership. So I think it's absolutely worthwhile having a look at that now. The last thing I'm going to say is please join us for the networking. Here is the Zoom link. Please, that's starting straight away, and we'd look forward to seeing you there. Thank you to everybody. Thank you for the audience for attending today. Thank you to Kirsty. Thank you for the panelists. Thank you for Jeremy and his team who've been putting on the tech for this excellent event. And look forward to seeing you in the networking now. Thank you very much indeed. Bye-bye now.
Thank you, everyone.